What's up, you guys? It's Simon with Simon Says Finance, where on my channel I hope to share with you some key topics to help you become more knowledgeable and confident handling your own personal financial goals. For today's video, we're going to be talking about some of the key myths that are out there for credit cards and how some people like to say that they should be used this way and not this way, or that way and not this way, or just not to be used at all, or that all credit cards are bad for every situation. But more often than not, these myths come from partial truths that are usually only take into consideration one specific situation and not really the big picture of what credit cards are really out there to be used for. So in this part one of two series of Mythbusters Credit Card Edition, we're going to be going over 7 of the most common myths with credit card usage so that I can help protect you from falling into one of these traps or one of these partial truths that are out there. Now, I know there are many myths out there about credit cards and how they should be used, so it's almost impossible to go through almost every rumor that is out there in 1 or 2 videos. So if you have any situations particular to you, or if you heard some common myths not described in this video, make sure to comment down below and I'll get to those comments, and if it's asked often enough, we'll make a video just for you. So just as a quick disclaimer, I am not a certified financial advisor, so if any time during this video it's up to you to fact check everything and to make your own decisions on what is best for you and your financial goals. With all that said, let's get started. Myth number 1, you don't need a credit card, just pay everything in cash, that way you never go into debt, right? So the belief here is that if you never pay in cash, you're never given the opportunity to go into debt because you're never going to be able to spend more than what you have right now. So this is often the belief of the followers of Dave Ramsey, who has done wonders in the financial world and getting millions of people out of severe financial debt. I've read his book, The Total Money Makeover, which I highly recommend, where he goes into 7 baby steps on how to get out of consumer debt. And I'll put that link down below for any of y'all that are interested in that. And yes, if you never have to borrow any money or use a credit card and pay everything in cash, then you'll never go into debt. But this idea of paying everything in cash and never using a credit card does have its downsides. The reality is that 99% of the population cannot pay for a house in full, a vehicle in full, and their student loans in full. Because of that, we're eventually going to have to take a loan from a bank or somewhere, and they're going to have to look at your credit history and your credit score. And if you don't have a credit score or credit history because you never paid in cash, then you're obviously going to be out of luck. Even if the bank magically approved you for a loan, you're more than likely not going to have the credit score that's going to allow you to qualify for their best interest rates, which thus are going to cost you more money in the long run. And even if you're really focused on just saving on your money so you can eventually buy a house in full, I would argue that it's actually better to take out a loan for your house than it is to save up money over years and buy it in full. And here's why. If you saved $500 a month into the savings account at 1% interest to pay off a $200,000 house today, it would take you 29 years to save up and pay the $200,000 home in full. But within that 29-year time frame, you have to live somewhere. Not to mention, in 29 years, real estate has appreciated 3% per year historically. So by the time you save up the $200,000 in your savings account that is giving you 1%, the house would actually now cost you $471,313 in the same time frame. So now not only will you not be able to afford to pay off the house in full, you would have missed out on all of those principal pay down payments, not to mention the tax benefits that owning a home gives you, because you could even write off the mortgage interest and take the standard deduction of $12,000 if you're single, or $24,000 if you're married, just for owning the home. So really, if you consider the fact that if you ever want to get a home and take out a home mortgage, you're going to need to have some kind of credit score or credit history that is high enough in order to qualify you for those best rates, so you're not paying extra thousands of dollars in interest. And although paying everything in cash sounds nice, it's not going to help you to reach that goal of qualifying for those good interest rates for your home mortgage. So really, there's not really a cheaper or easier way, in my opinion, to build up your credit score than the use of credit cards. In fact, you can actually make a profit from credit cards if used correctly. Myth number 2, you should only pay the minimum of your credit card balance every month. That way you can keep a balance to help build your credit history. So the belief here is that if you pay interest or if you carry a balance every month, it is a requirement in order to build your credit history. And without it, you won't be able to build your credit score. But the reality, if you look at this chart, the payment history and the percent of on-time payments are categories that make up your credit score. But notice that paying interest is not a part of something that builds your credit score. So deciding to keep a balance on your credit card and paying the minimum balance does not help you. As long as you make an on-time payment, that is what will build your credit history. Whether it's a full payment or just a minimum balance, it doesn't make a difference as long as you're showing on-time payments every month. Also notice on this chart, holding a balance on your credit card will increase your utilization percentage and thus will actually hurt your score instead of help it. So in terms of the utilization category of your credit score, it is better to pay off your credit cards in full as opposed to carrying a balance every month. So overall, as long as you're using your credit card on a regular basis and making a payment every month, whether it's full or partial, that is what will build your credit score. The fact that you're keeping a balance or not keeping a balance every month is independent of anything that's going to help build your score. Myth number 3, getting a new credit card will severely hurt your credit score. The belief here is that any hard pulls on your credit report is actually going to bring your score down. However, the reality, if you look at this chart, the amount of credit inquiries is the smallest portion of what makes up your credit history. You can have up to 2 inquiries in a 2-year time period and you will still be in the good category. And after 2 years, those inquiries drop off your report and it's as if it never happened. Now, yes, on the surface, you say you applied for 4 credit cards in 1 year. That will put you in the fair category on this chart. And that technically will lower your credit score if you consider nothing else. However, notice on the chart the categories for utilization, total number of accounts, and average age of accounts all make up a bigger portion of your credit score than the number of inquiries you make. If you get more credit cards, your utilization will go down, which will increase your credit score because you have a much bigger total credit limit on all your credit cards. Also, your total number of accounts will go up, which will increase your credit score. However, things that can lower your score are the number of inquiries, which went up if you applied for mini cards, as well as the payment history average will more than likely go down because now you're adding new cards that have no history on them. Now, if you're an older person that has extensive history already on multiple accounts, your average age may never go below 9 years, so applying for new credit cards won't really hurt you. It can actually help you by increasing the number of accounts and lowering your utilization. I actually helped somebody in this category that was in their 40s and only had 2 credit cards, but each of them had 20 years plus of history built on them. And he was worried that getting another credit card would hurt his credit score. But I looked at his entire situation and actually recommended him to get another credit card because he was lacking in utilization and also in a number of accounts. And sure enough, he applied for another credit card and his score went from 700 to a 780 in 30 days. And this is because he had the credit history, he just didn't have the utilization and the number of accounts to where they need to be. But if you look at this chart and you're a younger person, and you say you just have 1 credit card that has 5 years of history on it, and you apply for 4 more credit cards, then your history average will go down to about 1 year, which will affect your score because you don't have much of a foundation built up. And on average, I've seen that getting a new card for younger folks will usually bring your score down temporarily about 5 points per card. But on the flip side, as time goes on, you'll have a better credit foundation because not only will you increase your average credit history over time, but you also have more accounts and less utilization. So in the short term, if you get another credit card and you're young, more than likely you'll take a small hit now, but over the long run, your score is going to actually increase a lot because not only are you having more accounts, but each of these accounts are going to gain history and your utilization is going to be lower. So in a way, you sacrifice now for the future. Myth number 4, people only use credit cards when they have no money, or they only use credit cards because they don't have the money right now to pay for it. So the belief is people think that people use credit cards just so they can buy something now and pay for it later, or to buy something very expensive so it becomes more affordable for them to pay in payments over time. This also comes with the belief that if you have the money to pay for it in cash, why would you even use a credit card to pay for it in the first place? But the reality is that using the credit card to pay for something over payments to make it more affordable is actually the worst way to use a credit card. The best way to use a credit card is to pay for everything you can with it, like groceries, gas, utilities, your rent, grandma's slippers, or Little John CDs. Yeah! The reason for this is that credit cards give you rewards such as for cash back or travel. And if you had just bought everything in cash, you'd be missing out on all these points. Not to mention, debit card or cash is not going to help you to build your credit score. And I personally use credit cards this way where I just use it for everything and I always pay it off in full every month and I get all the rewards. So you don't have to fall victim into the belief that only people that are broke or people that don't have money to pay for things use a credit card. A lot of people actually use this to help get the perks they get and never have to pay a dime in interest. Myth number 5 is that it's better to pay with cash or a debit card and not a credit card. The belief is that there's no advantage to you by using a credit card, and that if you pay in cash or with a debit card, at least you're never going to overspend. However, yes, if you pay with cash or use a debit card, it's going to be very difficult to overspend. But on the flip side, if you use a credit card, they have some features that a credit card provides you that paying in cash or a debit card does not give you. First of all is that pretty much all credit cards have fraud protection built with them. So if any time you become a victim of fraud or you see a transaction that was not made by you on your credit card statement, you just have to call them and they'll remove it and issue another credit card. On the flip side, if somebody got your debit card information and they started making transactions that were not authorized, not only do they have a direct line to your personal funds, but also many banks don't even refund you for any fraud-related activities, whereas a credit card, they would. And I have a friend personally that this happened to where his debit card information got taken and they took a couple $1,000s from his account and the bank would not refund him from that. And ever since then, he's been using a credit card for every purchase he makes. And financial fraud is actually pretty common out there. I've actually personally been a victim of that, but luckily I always use my credit card. So the situation happened actually about 6 months ago, where I started seeing it was actually a $2,000 total charge on my credit card statements. It actually started out pretty small, where like a 15-cent charge, and then maybe it was an $1,800 like a medical charge, and then another $500 charge, all in the same state, somewhere I've never been before. And I'm always looking through my statements every month before I pay to make sure there was no unauthorized charges. And I caught it pretty quickly, so all I had to do was give Chase a call, and it was actually a Chase Freedom credit card that this happened. And they pretty much took it all off, and they issued me a new card, and everything was fixed. Another feature that credit cards give you that debit or cash does not is its membership perks. So let's use in this example the American Express Platinum, where they give their members free access to airport lounges where you can get free drinks, food, and oftentimes massages. American Express also offers a $200 airline incidental fee credit towards your airline of your choice that can be used to offset any charges such as check bag fees, lounge passes, and seat selection. They also offer a Uber credit of $15 a month with a $35 credit given in December. And they also give you the Hilton and Marriott Gold status, which makes you eligible for free upgraded rooms and free breakfast that would normally cost you about $20 a meal. Not to mention, their sign-up bonuses are always somewhere between 60,000 points to 100,000 points, depending on when you sign up for them and what they offer at that time. And this usually equates to about $1,000 in points that you can use for booking a free trip. Now, this credit card does have an annual fee of $550 a year, but if you're a person that travels often, these perks are usually always pay for themselves. Plus, if you're in the military, this company actually waivers that annual fee of $550, so it's definitely a must-have for any military dudes out there. Now, I personally don't pay with anything with a debit card or cash, and because of that, I've been able to gain over $5,000 in perks from travel points or cash backs from credit cards over the years, and I've never had to pay a dime in interest. And I would have missed out on all this if I paid with everything with the debit card or cash. And if you're interested in getting any credit cards that I mentioned that have good sign-up bonus, I always put the links down below, so make sure to check that if you are interested in getting a new credit card. Myth number 6 is that you should never accept a credit limit increase. The belief is that a credit limit increase makes it more dangerous, for that if somebody took your credit card, they can actually spend more money using your credit card. The reality is that if someone does take your credit card and starts making unauthorized charges, the credit card gives you that fraud protection, so that if anytime you find this, you just have to give them a call and they'll remove it from your credit balance as well as issuing you a new card. But a good thing about getting a credit limit increase is that it's going to help boost your credit score, because now it's going to help lower your utilization ratio, because now you're going to have more of a credit limit available to you. And if you're one of those guys that are trying to max out every category, you need at least $50,000 in available credit to your name in order to max out and get that 850 credit score. So in reality, getting a credit limit increase is not really detrimental to your credit score. It actually is going to help benefit you. And usually credit card companies hand out these credit limit increases to their best customers, because now they trust you that you're going to pay them back, and they want you to be able to buy more. So they're going to give you more opportunities to make bigger purchases. Plus, credit card companies make the majority of their income from merchant transaction fees. So they want to give their best customers a higher credit limit so they can go out and spend more and make more transactions, because every transaction that business is charged a small fee in order to provide that service. Myth number 7 is that you should only have one credit card, because having multiple credit cards brings down your score. The belief is that people think that having multiple credit cards is going to bring down your score because it makes it seem like you need more money. The reality is that having multiple credit cards doesn't bring down your score, but if you try to apply for, say, 10 credit cards in a short period of time, that could bring down your score, because you're now using all these inquiries in a short period of time. And I know certain credit card companies such as Chase have like a 5 limit rule, where if you apply for more than 5 credit cards at any given 2-year period of time, they will not approve you for another credit card from their company, no matter how high your credit score is. But if you only get 1 or 2 credit cards per year, this is not going to be an issue and should not really bring down your score much, if at all. Plus, like I mentioned before, if you're applying for new credit cards, that inquiry is going to drop off after 2 years from your report. So it's like you have a new batch of all these inquiries that you can use. But having more credit cards give you more accounts. And as you can see on this chart, more accounts with more history brings up your credit score. Also notice that in order to max out this category, you actually need 21 accounts to your name in order to get the full capacity of this category. So this just shows that having multiple credit cards and having multiple accounts is actually good for you and does not hurt your credit score. So I've used the example of my friend that had about 1 or 2 credit cards, and he was like in the low 700 range, and he was fearful that getting another credit card as well was going to hurt his score. But I actually told him that it would actually help. He applied for that new credit card, and his score actually went up to 780 in 1 month. So that's just an example of how a credit card is not necessarily going to bring down your score. It actually can bring it up depending on your situation. So no, having more credit cards when you're using them correctly and paying them off on time is not going to lower your credit score. I personally have over 10 credit cards, and I got an 800 at the age of 24, so take that for what it's worth. Well, that's it for this section for Mythbusters Credit Card Edition. Now, I know there's many myths out there and a lot of bro tips out there on how to use credit cards and how you shouldn't use credit cards. So if we didn't go over anything, or if there's something I mentioned today that you have a question about, make sure to comment down below and we'll discuss that. And maybe if many people ask about it, the same thing, we're going to make a video of it. And if you haven't seen the other part of this series of Mythbusters, Credit Card Edition, make sure to check that out so you can see what other myths are out there. Overall, I hope you learned something from this video. I know myself personally, fell victim to a couple of these myths when I was younger, when I first started with credit cards. But now that you've seen this video, you'll be better equipped to help make sure that you're not blindsided from something that maybe a neighbor or a friend told you about how credit cards should be used. And if you liked what you saw here today, make sure to hit that thumbs up button. Subscribe to my channel if you want to see more content like this. We're going to be putting out content every week. And comment down below if you had any experiences with any of these myths, or actually some myths that we haven't mentioned yet, so that we can all be aware of what people are saying out there. Also in the description, I'll be putting various credit card links for things that I've used and I recommend to family, as well as some books and websites that I think you're gonna like. But anyways, until next time, Simon says do as I say, and have a great day. Thank you.